Let's take it across with the Group CEO at Kolte-Patil Developers, Rahul Talele, joins in on the show right now. Rahul, hi, morning. Good to have you on the show. Rahul, after a record FY23, you're targeting to achieve 2,800 crore sales in FY24. You already have a run rate of 700 crore plus per quarter since the last 2 quarters. Do you think this guidance is conservative then? And how's the traction on ground currently?
So, in last 2 years, if you see the numbers 2 years back were 1,200 crores. So it is an orbital shift for the company. So from 1,200 crores to we have reached almost double the number in 2 years of 32 crores. And going forward, we are confident of achieving a 2,800 crores pre-sales target. To answer your question, we are confident about multiple launches in Pune. Even the launch pipeline is pretty stronger. But we are simultaneously concentrating on a betterment of price realization also. At the same time, we want to achieve a good set of volumes also for the company. So this year is going to be a better price realization. On top of that, good aggressive numbers in terms of the pre-sales number as well. So 2,800 crores is the number what we are targeting for. And on top of that, what we have observed in last 1 year, there were little deviations in our projected launches. Hence, we don't want to face similar challenge, and hence we are at this moment we are confident of achieving 2,800 crores of number with the set of launch pipeline, and we are communicating that as a guidance.
All right. Wanted to understand the outlook on your sales, because over 60% of that in Q4 was on account of the Life Republic Township. What is the outlook in terms of the inventory that's still on hand from this project, and what other projects will contribute to your 2,800 crore rupee sales target?
So Life Republic is a flagship township project for us. So over there, around 14 to 15 million square feet of balance inventory is there. So currently RERA launch inventory is close to 1,000 crores in the township, and in the ongoing financial year, we are planning to launch multiple phases, multiple new sectors in this township as well. So in last 2 quarters, we have consecutively crossed 400 crores of pre-sales number in this township. And so one important thing from a township perspective is there is a good amount of price realization betterment in last 1 year. So we used to sell an inventory at around 5,200. Now we are selling an inventory in the range of 5,700, 800. So that is a very positive move, considering the fact that we are sitting with a huge pile of future inventory in this township. So it is a positive sign. To answer your second part of the question, so this 2,800 crores, out of that 75% will come from a Pune projects, and 25% will come from a Mumbai and Bangalore projects. And even in Pune, so in fact, township, more than township, we are planning to get the numbers from a non-township projects in Pune, considering the fact that we are strong with our launch pipeline.
Right. On average, Rahul, property prices have risen by about 9 to 10% in the top cities. But there is a marked improvement in your realizations, about 14% as I understand sequentially. What's causing this? A better sales mix? And how is pricing expected to pan out in FY24?
To answer this question, if you see the last year, average realization was close to 6,400, 500, and this year it is close to 6,800 per square feet. Considering the fact that our Mumbai percentage is going down from 30% to 20%, but still we are bettering in our per square feet price realization on the fact that on the basis of it is a better realization across projects in Pune or non-Mumbai projects. So we have improved our prices in the range of 5% to 10% across our projects in Pune and even in Mumbai. So it is largely because of that. But yes, to some extent, it also depends on which project is contributing how much and what is the the price tag of that specific project.
Right, and apart from the healthy growth in revenue, we have seen a significant jump in delivery at about 3.3 million square feet for FY23. Can this become a benchmark now for you?
See, delivery is a function of what is the height of building and when you have sold the maximum your inventory. So, I mean, there can be a spikes in terms of the delivery, but yes, even in the FY24, our delivery numbers will be at least 3 million square feet. And going forward, since our pre-sales base is going up significantly, and if you consider the average project tenure of 3 years, going forward also we are focusing on the better and better delivery numbers year on year.
Right. You're also planning to acquire projects with a top line potential of 8,000 crores, right? Just wanted a sense as to how is it that your debt levels would move? How do you plan to fund this project pipeline?
So currently we are with a net debt to equity of 0.1. So our net debt is hardly 110 crores. And for this new BD acquisition, which is already in a very advanced stages of discussion, for us, the need is in the range of 500 to 550 crores. So our priority is to fund this through internal accruals. And the second priority can be leveraging further. So for that, we have taken I mean, there is a good amount of room to go further in our debt to equity ratio.
And several competitors as well have been capitalizing on the redevelopment opportunity in Mumbai. You recently signed as well a redevelopment project. What is the opportunity that you see here?
So in regards to these two projects that we have acquired very recently, we are aiming to achieve a launch for one project, which is at Vashi in next 6 months. And for the other project, which is at Mulund, we are aiming for either in Q4 or Q1 of next financial year. So we are already started working on the approvals of both projects. And yes, we have, delivered 2 projects in Mumbai in redevelopment space. There are 5 ongoing projects for us in redevelopment space in Mumbai. We have got a good traction across 5 projects. So there is a good amount of price realization improvement, and there is a good amount of velocity also for us in Mumbai. And considering this trend and feedback received from the redevelopment vertical, we are focusing over there to acquire more and more projects. Having said that, we are also working for a non-redevelopment acquisition in Mumbai.
Right. So far, Rahul, we've only spoken about Mumbai and Pune, but what about Bangalore? Rental yields have risen significantly over there. Available inventory is also low. Would you be looking at doubling down your efforts in this attractive market?
So, I mean, we have a presence in these 3 geographies. Our focus is to enhance, strengthen our presence in Pune, likewise to take the opportunity of our experience in Mumbai, and likewise we want to have a niche project in Bangalore in the form of JD and JV, and we are evaluating a couple of opportunities over there. But to answer your question, there is a good amount of rent improvement in Pune as well. So wherever the IT presence is there, there is a good amount of jump in rental yield in specific assets. So we are focusing on Bangalore, but this year is going to be a focus on Pune and Mumbai, and partially on a Bangalore in terms of the BD opportunities.
Sure. Rahul, consumption trends across India indicate a K-shaped recovery for realty. Is that something that is impacting your project mix decisions? Will you be looking to launch more high-ticket projects in the future?
If you see our priority launch pipeline, it is a blend of all sets of projects. But in the recent launches, our experience is very good in terms of the high ticket size spacious units. So MIJ and HIJ are contributing more as compared to affordable or smart projects. But at the same time, we are offering across verticals and across price brand price band, particularly in Pune. So right from, we have a product right from 5,000 to 12,000 rupees a square feet in Pune. And we are confident of achieving a good velocity across projects. So most importantly, post-COVID, the customer requirements have changed. So if you are addressing the needs of customer, then you will get a better velocity in all sets of projects. And that is what we are aiming for.
So much then for taking time out and joining in with a take on how business is shaping up.